What's up, guys? So Tesla was actually up 2% today. We're going to go over that, and if I think we're going to bounce or break 212 this week. We're also going to go over some bigger time frame levels. We're going to look at the smart money concepts indicator by Lux Algo, one of my favorites. We're going to go over how to use it and how you can set it up. And we're also going to go over briefly some earnings, because we had Google come out today. Not good. They did beat on the top and the bottom line, but Google Cloud missed drastically. No guidance from them, which normally happens. And then we had Microsoft, which is up after hours, that had pretty good numbers. I don't really know how the call is going right now. And then Snapchat is absolutely insane. Mara, if any of you guys trade or invest in Bitcoin or any of these other companies, Mara is up massive. We're going to go over the Twitter posts that I put out earlier. If you guys aren't following me on Twitter, do yourself a favor, right? I post so many amazing trades over there, Tesla updates much faster than I can get them on here. And then usually at the end of the day, we'll go through and we'll take a look at them on the actual YouTube video, which most of you guys watch. If you want real-time updates, real-time trades of mine, real-time unusual options flow handpicked by me, go follow me on Twitter and follow our Discord community, which is completely free. We're going to go over how we timed some puts today on Tesla, because I made about $1,300 here, or a 26% return on the day. And I want to go over how I was able to find that, and then how you guys can replicate that within your trading at any point in time on any ticker. So let's get into it first, just by looking at Tesla. We're going to start with the weekly chart. So the weekly is very important, because we're going to easily be able to, number one, cut out the bullshit, cut out all the noise, focus on the clarity. And when you're trading on bigger time frames, or you at least have an overall direction of what's happening on a bigger time frame, you're really only focusing on the things that are extremely, extremely important. Now, the indicator that we're going to use today is going to be called Smart Money Concepts by Lux Algo. So you have 31,000 downloads. I have no affiliation with them. I never really use any of their paid stuff. I use a couple of their trading stuff here, but to be quite honest, this one's just like more than fine. And what this is going to do is show you where there are big institutional levels of resistance and support. The red ones are going to be order blocks that are bearish, and then the bullish ones are going to be blue. If you can't find Lux Algo, or you want to use something different on whatever app or charting platform you use, you just type in order blocks and this will come up. You'll be able to find order blocks. There's a bunch of them on whatever charting software you're using. And you'll also be able to go and type fair value gap. And this is very important. Fair value gaps, which you'll see this big one here after earnings. These occur not just when there's a price gap, but they occur when there's a big movement that happens that big money and institutions can't fill on quick enough. Because if you're an institution, if you're a whale, if you're whatever you want to call them, market makers, whether most people don't even know what they are, like we can go over that in an actual video if you guys want me to go over the difference between all of them. We can do a full comprehensive video. Definitely comment down below if you want me to do that. Now, what I mean is that they can't just go through and take $200, $300, $400 million positions like this. The way that you take a $4,000 or $5,000 trade, it's not the way in which they build out positions. So that's why there's these liquidity levels that in most cases we will retrace to, and that's usually going to be at the time of rejection. So looking at this, we have two liquidity levels that we have to keep an eye on. The first one, and the first very fair value gap, is going to be 235 to the north. And then we have a big one down here at 150. Now, just like all gaps need to be filled, a normal price gap, fair value gaps normally fill as well, about 87% to 89% of the time. But there are the one-off chances that they just don't fill. If there's a fair value gap down at like 20 or 30 bucks on Tesla, I highly doubt that that's going to fill. I do believe we'll probably see a move back down to 150, worst 150.72, which would fill the fair value gap, and it would also bring us down to this big support level on Tesla where there's a massive bullish order block. In the meantime, however, if we don't break 212, we will see this bounce and this move most likely back up to 237. This would bring us up to the middle of the fair value gap. The other thing that it would do is if we take our Fibonacci retracement tool, which is one of my favorite tools to use, I usually just only care about the 0.5 and the 0.618, which we'll talk about in a moment. But we can take that on last week's candle from swing high, bring it down to swing low, and pull it out. Now, like I said, the only ones I really care about is the 0, the 0.5, and the 0.618. Sometimes I'll throw the 0.786, but we really don't need it. The reason that we only care about these levels is that the 0.5 and the 0.618 are going to be the golden zone. And all a golden zone means is that this is going to be the level at which the trend is either going to continue, which means you're going to buy into the trend, which in this case would be down, or it's going to be the point that if we break through it, that the trend will start to reverse back up. So I do think that if we push up over 245, there's a chance we can move back up into the 260s. But what I think is going to happen more likely, which we've been saying, is best case, I think the Tesla bounces about 5 to maybe 7%. All, market makers, whales, everybody tricks retail when the stock gets driven up, thinking that that was the bottom of 215, and then what they do is they start to taper out of their position. They get retail, which is just everyday traders, to hold the bag. We end up rejecting, most likely, I believe, up here at 236, and then we make a lower low, ultimately coming down, I do believe, in the next couple of months, down to about 160, and then maybe worst case about 150 before bouncing. Now, as I always say, I hope I'm wrong. I'm a Tesla bull and I have a lot of shares long term. I also can't sit here and not be objective, right? We have not the best earnings. We have not the happiest CEO, not the most optimistic CEO of all time right now. A lot of people seem to be losing faith in Elon. And overall, I don't see the market ripping in the next couple of months. I can always be wrong. But it seems that the probability here, which possibilities are endless, but the probability is that we will probably move up to 230 and ultimately reject. So what does that mean? If we end up rejecting, well, like we said, next level would be about 200, 190, and then down at 160. But let's talk about some bullish things first before we really start to look at the stock market as a whole, and before we get into that Tesla recap of the trade. I want to go down to a smaller time frame, which is going to be the daily chart. The daily chart is still a very, very big time frame, a very good time frame to watch, especially if you're somebody who is a swing trader or a long-term investor, because you get a really good idea of where the market is, what EMAs are trading over, how the overall sentiment is and what the trend is. I really believe that even if you're somebody who doesn't care at all about trading, you should at least understand technical analysis on a massive time frame. So looking here, we had an Elliott wave, 1, 2, 3, 4, 5, followed by the ABC, and then the break back down. As we came back up and we tested of 280, you can see crap ton of selling pressure, guys. 1, 2, 3, 4 massive order blocks, no bullish blocks in sight, massive sell-off, break of structure, and now we're bouncing. I don't believe that we're bouncing here. It looks like a weak bounce too, which we'll talk about that as we go into unusual options activity later. But I do believe it's a weak bounce. At this moment, the bulls, they did step in down at 202. They drove the stock all the way back up, which is why you need to be looking at these candles as a psychological tug of war. The analogy I really like to use is going to be Squid Games, when they have one team up on the right side and one team up on the left, and they're pulling, and the loser is actually going to fall down into the pit of hell or death or whatever it was, I don't remember, but they're going to fall down into the pit and they're going to lose. So think of these candles as a tug of war on the day. The tug of war yesterday opened by the bears winning, pulling it all the way to one side, almost through $200, but right at the nick of time, the bulls came in, pulling it, and not just pulling and holding, but pushing us all the way back up to 211.91, where we ended up closing the day out. Then today we see this push up where we end up opening here at about 216.67. The bears take over for a bit, then the bulls take over for a bit, and then the bears pull it right back down to where it closed. So yesterday was a bullish signal that, hey, bulls are going to step in, we're going to buy this massive dip down at 200. We need more people, which is why we need to be focusing on volume, and we're going to talk about this in a moment, but you need people to step in. It's not just us. It's not just, okay, retail can't move the market. It's like big players need other big players to step in and to bid the market up. That's how prices go up. The price of Tesla stock is only going to go up because someone's going to bid it higher. And so therefore we need volume, and we need other players to come in to put the stock in whatever direction that we want it to go in. So in my opinion, this is not a good close here because there's a lot of weakness. We may have had a strong day yesterday, but it didn't really continue into today. And if you look too, a lot of indecision in these candle closes. If we look at the S&P 500 as well, a lot of indecision in these candle closes where we kind of bounced around today. It's because of earnings. We have implied volatility. We know that big tech earnings has still to come. We knew today that we had Microsoft, which we said is up. We knew Google was today, which is down, and we're still monitoring and watching for things like Apple, as well as Meta and Amazon. So that's why you're not going to see some massive decision until you get the move after the implied volatility is removed, because we already know what earnings and guidance for big tech is going to be. And if we look now, the S&P 500 actually futures at this moment, they're not down that much, but they're down 0.19, kind of sitting sideways here. So tomorrow we're really going to want to see Tesla hold up over about 217.50 if you're a bull. If not, we could see the continued drop down to $200. Now, I want to talk about the position that I actually took on Tesla, and then we're going to talk about Mara and Bitcoin, because I know a lot of you guys really come here for the Tesla content, but it's important to have an understanding of what's going on, why Bitcoin has been running so much, and how you can make money off of potentially some other companies. And I want to share why we've been calling out Mara for the past week or so. But let's first take a look here at my Twitter account. So I don't really call a ton of day trades out at this time. And the main reason is because I feel that no amount of money is worth your guys' stress. You guys shouldn't be sitting there hoping to make, a couple extra $100 while you're at your day job, but you're stressing and you're really eventually not going to end up trading well. You're going to eventually not do your job well, and everything's going to fall to shit. So why did I take this position on Tesla today? If we look here, and we're going to go through and replay this, we have a bearish shark pattern, which was setting up, and this ends up being right with the way that I code this 78% of the time. So we know 78% of the time, we're going to reject. The trend is going to reverse, and we're going to see a pull down to T1, which in this case was $214. And so we know that if we do this over the past month, we would make a 13% return, which is not too shabby. But in this instance, as that cipher pattern happened, we didn't get in as soon as they occurred at 217. We actually allowed it to continue to run, and now we're catching it right trading around this level of 221.03. So now our risk versus reward is so high, because our potential loss is just the move up to 223, while our potential gain is the move back down to 214. These are the types of trades you want to take, ladies and gentlemen. This is why I shared it, not because I was going to be a banger, but I know statistically, 5-to-1 risk versus reward with a 78% chance of profit, whether we make money or not, because that's not the case. We don't care if we make money. We care how we trade. And if we trade to an edge to perfection that we have created, whatever the outcome is, it doesn't matter. Like, the only thing that we care is, are we sticking to the things we say that we're going to do? It's the only thing we can control. So you can see here, right after we said that these puts are playing out perfectly, we rejected right up at that 222 level. You can see now I have the harmonic pattern turned off, and you can see that we have the fair value gaps. And not only on a daily, I day trade with it every single day. Same with the Elliott waves, which we talk about a lot. You can see here on the screen, 5-point Elliott wave, change of character, like the same thing that we look for. Change of character, Elliott wave, harmonics with the smart money concepts. Very, very simple. Okay. And if it's not simple to you, go into our Discord community, which is free. Go to the courses and seminar section and take our technical analysis course, which will cost you nothing. And it's everything I've learned about technical analysis, and we're adding an installment on about 5 or 6 other indicators that you guys really, really want me to add, because I've been using them very recently. So we see the rejection, we see the pull down, we're trending under, we get this big bearish order block coming in, sitting about $221, and then about $219, another one coming through. And look, every time, change of character, break of structure. So we're moving down in this drop, consolidation, break of structure, consolidation, break of structure, consolidation, which is what you want to see if you're trading with the trend. So we allowed that to play out, and I will say that my goal and my target was down at 214, but I had a pretty solid position. I was up about 26%, about $1,300, and I was keeping an eye on what was happening in the moment to see if we were going to potentially push back up over our resistance level, which is where I had my stop loss set. And so I ended up closing it out. And then you can see from here, 217.54, we can actually come in and look at the 30-second chart over here. You can see this is Tuesday. This is what we were talking about here. 222 rejection, came all the way down, bounced, and then look, I closed right here at 218. So if I would have held, guys, I would have probably made another $2,800 because we would have eventually sold off to lows at 214.12, which is my goal. That was my target. And then from there, bullish order block came in and bounced. So I closed too early. The main reason I closed too early is I had a pretty big position. I had a pretty big profit. And a lot of times, guys, when I'm day trading, I want to be done with it. Like, I just want to be done with it. I opened this trade today at 10:05 a.m. By 11 o'clock, an hour later, I'm up $1,300, and I think to myself, do I want to hold, potentially make another $1,300, or do I want to just close it out and be happy and be grateful and not have to worry about it, not have to think like, oh, should I do this, should that, and just not also too have to worry, like, if anyone followed me on Twitter, what if they, like, so I always have to think, like, I'm not just trading my money, I'm trading everyone else's money too, because if people are following me, like, I have a duty to uphold to, even though, like, this is not financial advice, it's just me sharing my thoughts, sharing my trades, sharing my ideas. I still have a duty to respect a position. And so in that instance, being up 26%, I'm like, I'm going to respect this position and close it out. So with that, very, very solid day, very solid trade there. Now, I want to talk about Mara, because Mara is a position that I currently have, and I'm going to go over Bitcoin very quickly as well. We are going to talk about the S&P 500 and QQQ. I know this video is already 17 minutes long, but if you guys are still here and you are interested on my take on the market, first of all, make sure you hit the like button and comment if you're still here. If you're still watching this after 17 minutes and 45 seconds, you are somebody who is going to take this seriously, and you are somebody who is going to be successful. You are like me, you share and you have the ambition and the shared drive to be free, to provide for yourself, to provide for your family. And we live in a world where most people can't even sit down to invest in themselves for 18 minutes a day like you guys are. So comment if you're still here. I want to know who's legit, and I want to know who takes this seriously. So looking at Bitcoin yesterday, I went over this on our other channel, Traders Helping Traders Community. Same stuff, guys. Same shit, right? So the actual news that pushed Bitcoin up was the potential, and this is the big thing, guys, the potential of there being an ETF, which would be huge. But from all the research I've done, which is like 20 minutes, I'm not going to lie, because I don't trade crypto and I don't hold any long term, it seems like it's not actually set in stone. It's just being hinted at. And we have seen Bitcoin just sit sideways for a very long time. And I will say, take my Bitcoin, analysis with a grain of salt, not because technical analysis doesn't work. It obviously does. I'm going to show you this, but mainly because I don't trade and I don't plan to trade, and I don't even say that I am an expert in this the way that I am an expert when it comes to trading the US stock market and when it comes to trading specifically options derivatives in the US stock market. So looking at this, we have the classic Elliott wave, and this occurs as we talked about yesterday, right? Where we have our first impulse, which occurs right here as a drastic sell-off, the bounce up to our resistance level, followed by a third sell-off, a bounce to the fourth level. And the reason that this is an Elliott wave is because the fourth does not come back up to the one. If instead we came all the way back up and crossed or touched 29,000, this is no longer an Elliott wave. And for those of you who don't know what an Elliott wave is, without going into too much depth, basically the market will normally move in impulses and waves. This is a classic wave. By the time it hits the fifth wave, which is going to be the third low, which we see here, the third lower low, or if we're looking at it in the opposite way, the third higher high, that is usually the reversal time. From here, we bounce, and look at what we bounce at, like we talked about earlier, our change of character and also our big bullish block. So the bulls step in, push up to this level, we start to use this resistance, and look what happens. Another bullish block comes in, change of character is broken, and then boom, we get this massive run, and now we're up at about 35,239. Something for you to notice here too, the opposite of what we're seeing with Tesla is that we actually have a massive fair value gap here. So there is a chance that we could reject, pull back to test 31,585, and then potentially move our way up north to potentially 40,000 or so. Now, I've been calling Mara, which is M-A-R-A, out on the channel and on our Discord community and on the Twitter for a very, very long time now. The past couple of weeks, we've been looking at it for the same situation that we see on Bitcoin. We have the 5 Elliott wave impulse. You can see 1, 2, 3, 4, 5, using $9 as a resistance level, pushing over, holding, and then a massive run, which we were talking about. If we can hold over 9 this week, we could see them move up to 1250. As of now, there is no order block resistance from here to 1250. So as long as we hold $9 this week, I do believe in the next couple of weeks, we should see Mara back up at 1250. And if Bitcoin can hold this level respectively going into the rest of the week, I think we could see Bitcoin move up to 45,000 probably within the next month or so. At this moment, I do not have a position on Bitcoin. I do have a position on Mara, which I shared over on my Twitter. Now, as far as the S&P 500 and the market, we have more earnings to come this week, so I don't want to get, too egregious or overzealous, but it does look like we could potentially see either this push back up into this level of about 430 and reject, or from there, there's also the chance that we might just move back down to 407. As you can see, we had this big impulse of this Elliott wave where we pulled back down to 430. We talked about this last week. Shoulder formed on this head and shoulders, and then we broke. But if you notice, we actually have an Elliott wave impulse to the opposite side that's happening. You can see we have first wave impulse here, pushing up to 2, rejecting here on these order blocks, coming down to the third impulse, retracing on the 4th, and now we have potentially found the 5th. We are not certain yet that this is the bottom of the 5th Elliott wave. There is a chance that the actual bottom of the 5th Elliott wave is another move down to 407. So I wouldn't be looking at this as, oh, here's the bottom, let's go long. What we have to see first is the confirmed bottom to actually make it the 5th Elliott wave, because the thing that messes people up is they think that because the 5 is there, that this is the time to go long. And the truth is, you could have thought that this was the 3rd Elliott wave right here, right? And instead, it actually sold off all the way down to 420. So what I would be doing, if you want to go long on the market, I'd be waiting to see if we move down to 408, and then I would be going long, because that would be the bottom of the 5th Elliott wave. Guys, I hope this video helped. If you're still here, as I said before, you're someone who takes this seriously, go check out our Discord community. It's completely free. And if you do want to get access to all of my trades, all of my private live stream, all of my coaching, all of my trading bots that I have scripted myself by hand, that I've put my name on. They're not some shit bots that I'm just buying from somebody else. Like they are literally my strategies. Because I'm putting my name on them, I deserve to make sure that it is everything that I want it to be. So go ahead and check it out, guys. I promise you it's worth it. I'll see you guys next time. Peace.